Chris called me, and I said, okay, well, we'll do alternative drivetrain technology as the next step in luxury vehicles. On our Bloomberg Intelligence dashboard, we created a whole bunch of new segments right here, green luxury, green volume segments. So all set to talk about those, and started to crunch the numbers and sort out by volume these segments, and they all fell to the bottom. Even the one larger one was subcompact, nothing to do with luxury at all. So okay, it's a premium luxury day. So we'll look at the companies, the high-end companies that are doing electrification. And that's what it looks like. So it's Tesla and nobody else. So short of doing a 10-minute presentation on Tesla, which I really didn't want to do, we're going to talk about what's really driving the auto space into 2020 and probably for a little while beyond, and that is money. This is the entire light vehicle mix in the United States year to date and going back 30 years. And you can see light trucks, and those are going to be pickup trucks, crossovers, including ones that are built on car platforms, SUVs, and minivans. 74% of vehicle mix in the United States in October. It's about 71 and change year to date in 2019. 3 out of 4. And this won't change, right? This is not a gasoline price issue. This is not an interest rate issue. This is a profitability issue for the manufacturers pushing the product, and a pull issue for consumers because these are the products that they want. The other evidence that this will not change is this is inventory, which we track on our Bloomberg Intelligence dashboard. Inventory in the US, roughly 4 million units. 76% of them are that form of light truck, with only 24% as of November 1st being cars, coupes, sedans, convertibles. So this is where the industry is. We talk about electrification as the future, but this is where we are now. So we took the truck car mix issue and I broke those numbers out. This is by unit volume. So 67.8% in just the premium brands are light trucks. So gone are the days of the slick black Cadillac being the idea of luxury in the auto space. And you can see in that last column the percent change, that's just year to date. Double digits on cars again in terms of a decline. You know, we're mid-single digits, upper single digits, depends on the year for trucks, really making up the difference. And this is not just a 2019 issue. This is really since 2013. We're seeing a lot of automakers double-digit 20% drops in their car unit sales. Their mix is obviously changing too. What we also do in Bloomberg Intelligence is we layer in transaction prices on top of the volume. So while 67.8% of the unit sales are trucks, 68.3% of the revenue, retail revenue, is from trucks. And again, a 9% drop on the car side, a 10% increase on the truck side. Those 50 basis point change in mix because of the higher pricing in trucks, in terms of retail revenue, is worth $350 million, just year to date in 2019. The mix shift for the industry overall, I just did this number yesterday for something else, since the last time the industry was 50-50 in the United States is $200 billion. Now, the other thing we look at in Bloomberg Intelligence is discounting. So the distance from, say, MSRP, and nobody pays retail in the auto space, we all know that. So the distance from that sticker price to what the consumer actually pays is a 6.4% discount on the truck side, and it's an 8% on the car side. So those three metrics we look at, right, that discounting for the truck side is equal to $3.4 billion. On the car side, because remember it's only about a quarter of the sales or a third of the sales, is $1.9 billion. So of that total, you have 64% of the discount allotted to the truck side. So when we're looking at it, we're saying 67.8% of the volume, 68% of the revenue, but only 64% of the discounting is coming from the truck side of the business. So manufacturers are going to stay with this mix shift because it's what's making them money. Easier to sell, revenue profit contribution is greater. This is a little bit of an eye chart, but I just wanted to point out, these are all the luxury brands we look at in Bloomberg Intelligence. And two things jump out at me. One is these guys up here, Alfa Romeo. This is the mix shift for those brands specifically since 2016. And I chose 2016 because that was peak volume, automotive volume in the United States. We sold 17.5 million cars overall, not just luxury, everything. And that was the peak. So here's the mix shift for those brands since the 2016 peak. Alfa Romeo leads, and that's just one SUV. Same thing, Lamborghini, from 0 to 45% with one SUV. Maserati, Bentley, obviously always considered car brands, those big luxury vehicles, also the biggest mix shift to basically half. There's a couple guys, the other one I want to show you is this one, Porsche, and we'll hear from Porsche later. It doesn't matter. 68% truck. You know, we think of 911s, we think of the Tynan coming, electric vehicle. 68% of that vehicle mix in the United States is from trucks. Some of those car-only guys down at the bottom, Rolls-Royce, Aston Martin, all have SUVs coming. We track production volume. We have a third party that forecasts production volume by brands. Lamborghini, you can see that blue is the Urus, their SUV, their only SUV, winds up being half the production. Aston Martin, the DBX, that SUV, as that comes, winds up, if it's not half, it creates a huge bump in production. Same thing for Rolls-Royce. Higher sustained production because of the delivery of the Cullinan SUV. So I'm going to tell you a story. I'm going to use poor old BMW to tell you a story about truck mix in the United States. We hear, and as part of Bloomberg, and I'm not on the media side, I'm on the Bloomberg Intelligence side, but we hear constantly how Tesla is taking everybody's lunch, whatever bullying simile you want to use, of BMW, of Lexus, of Mercedes, even of Audi, just running away and hiding with the entry luxury car segment with Model 3. And it's true, right? They are. So poor BMW, 9% decrease in car volume year to date, 6% on 3 Series, which is their bread and butter on the car side of the business. Now, if you look up here, their truck increase is 15% for a net of 3.3% to the upside year to date in 2019. So what does that mean? 570 basis points of mix shift to higher cost or price trucks, higher margin trucks. So they're at 56%, catching up to Mercedes, who sort of ran away from them in the past couple years. 56% truck mix in 2019. Keep in mind where the premium segments are at 68, so there's still some catching up to do there. But what that's meant, I keep pressing that wrong button. So here's transaction prices in the U.S., and you can see come down in the third quarter a little bit, but look at that second quarter. Those are 3 straight months over $60,000. In fact, over $61,000 for BMW as a whole, highest it's ever been. So while Tesla is taking entry luxury car share, BMW is sort of cleaning up on the truck side of the business. So what does that mean? 6.4% increase in average transaction price in the U.S. to $59,000, which is the highest it's been. And then when we layer in that retail revenue, then that's quarterly. It's actually up 10% because of that richer revenue per vehicle mix. That's been the equivalent of $1.2 billion in additional retail revenue year to date for BMW. And here's really what it all comes down to. 3 quarters of 2019, BMW just getting devastated by Model 3 in their 3 Series has earned globally, these are global adjusted operating income numbers, $5.3 billion. Tesla has lost almost $1 billion, and they had a profitable third quarter with some currency adjustment in there. And we put Daimler in there because they had sort of run ahead of BMW on the truck side of the business a couple years ago, but starting to struggle a little bit now. So point is, we use Bloomberg Intelligence, and we would encourage everybody, get beyond that headline number, right? They're going to tell you volume numbers or if it's revenue numbers, but there's really more going on behind the scenes in the auto industry, and it really comes down to this mix shift to trucks. That is my time. Have a joyous holiday season and a prosperous 2020. Thank you.